Let's keep it more interactive. We want to keep it less like, one-sided, just having a Q&A, but more like, because it is a smaller group, so that's the benefit of having a smaller group to kind of have the engaging conversation. The goal of it is to, get their perspective on obviously what's happening here, but also what's happening in the global market, particularly in cross-border from a MENA angle, and what their thoughts are. And if you have any questions, feel free to kind of raise your hands. I'll kind of point out, and then we can go from there. With that said, maybe you guys can start introducing yourself. You had a very short intro and about your role in the fund and kind of any ties back to the MENA region as well.
Perfect. Yeah, thank you. Hi, everyone. Riley Rogers. I'm a principal at Valia Ventures. Valia is a seed stage fund. We raised Fund 1 2 years ago and are closing Fund 2 now. We invest in companies here, predominantly in the Bay Area and also in New York. And we work with very large family offices back in the Middle East and North Africa. And so the connection for us was always helping those LPs access opportunities here. And then there's also part of our business, which we can talk more about later, which helps companies from here expand into that region.
Hi everybody, my name is Anastasis. I'm a co-founder of Panelists Embassy. We're not technically a fund, we are an equity-free accelerator based here in San Francisco, but we focus exclusively on international and immigrant founders. So we bring founders multiple times a year down to San Francisco for 2-week programs and introduce them to the Valley, to our thought leaders. We are industry agnostic and we're country agnostic, so that's kind of our ties to MENA. We welcome founders no matter where they're based from, no matter where they're from, so that's who we are.
Hey everyone, pleasure to meet everyone. The room is too small, I hope to get to know everybody's names by the end of it. So. But my name is Halawa, and I head Mubadala's venture business here in the US. We basically are deploying $1.2 billion across 3 geographies, $600 million at the early stage here in the US, focused on North America. We have an office in London that deploys 400 million euros roughly, and $250 million in the MENA region specifically.
Awesome. Good job. Perfect time. It was supposed to be there. So we just started, and we're asking the panelists to do a brief intro about yourself, your role in the fund, and what your ties back to MENA is, personal and professional.
Sure. So I'm an Egyptian American born in Los Angeles. I grew up in Los Angeles for the first 30-ish years of my life. Started as an entrepreneur from college days. Failed at a bunch of companies. Did okay in a couple. And then I moved up to the Bay Area. A friend of mine was starting a mobile ad tech company up here, and we were funded by Sequoia and Excel and a few other VCs. It was the fastest roller coaster I've been on, and a year and a half later or so we got acquired by Google for a large sum. And then I had 3 kids at the time, so I ended up staying at Google for a while, just to sort of park. Park on the.
Do you mean it's easy to be at Google?
It's much easier to
That is not right.
Yeah, and so I was like looking at that period as, oh, that's my failure period, because I just parked as an executive. But I ended up getting an itch again, and it happened because of this organization where I was taking a trip out to the Middle East with Google for Entrepreneurs and TechWadi. I went to Jordan and Lebanon and UAE and Egypt for the first time as an adult, sort of from a business perspective, and I got to meet entrepreneurs from there, and I thought, like, wow, this is like really exciting and more exciting than the work I was doing at Google. And I met folks out there, and it just kind of got the bug. And even when I was back at work, I said, I couldn't stop thinking about what was happening there and how easy it is for folks like you guys and us to just offer a few minutes and actually help a lot. And the mentorship turned into, well, they need more than mentorship when you hear their stories about them trying to fundraise from investors. And I said, actually, one of the folks here is the one that kind of pushed me in and said, like, you should do it. So we ended up, and actually there was some good momentum. It was 2015 or so, and we said, okay, well let's try to raise a fund dedicated for a U.S. Silicon Valley fund focused on the Middle East, and we did it, and we launched it in 2017. I've done 175 investments so far in the last 2.5 years. And it's moving like crazy. Like at the time, I went up and down the Sand Hill Road and just folks that I knew. I was like, "Hey guys, like, how come nobody's investing over there?" And they didn't even know where it was. And it was like they pointed to one exit that happened in 2005 or so, where Yahoo had bought a company. That's the only news Silicon Valley had heard about the region. And they said, well, that's the primary reason. It's like there's no completion of the cycle, like what are the exits? And I just felt, and you could just see from the momentum there, that there was a lot of, the pieces, the macroeconomic situation was there. And it was already happening in Southeast Asia and Latin America and other markets. Like, this is going to happen, so why not start now? And so now we're on our, well, SEC is not the rule, but yeah, we're going to continue the work we're doing. And it's been great. I moved there a year and a half ago.
That's awesome. Yeah, that perfectly kind of segues into that. And the next one I wanted to ask you guys is more the innovation economy. Obviously with SVB, we've been around for 35 years, kind of track on what's happening around the globe, especially on the US kind of calls we have more. You know, there's a lot of good and bad that has happened over the last few years, right? Obviously there's trade wars, tariff checks, there's political tensions kind of everywhere. But there's also, we're trying a ton of investments kind of flowing into kind of different parts of the world. So what do you, since you guys have such a close pulse into the regions, especially from kind of being a region, what are your thoughts on how things have progressed in the last, say, 5 years? And how do you see that like in the next 5 or 10? I would say like in simple sense, is it like a plateau or is it going to be pivot? If it's pivot, I want to know where you see it as well. Or if it's a down, I want you to be kind of candid and say where you see the challenges as well. I know it's a loaded question, but would love to hear your thoughts. Maybe I'll let you start with you.
Yeah, sure. I mean, I think if you look at Mubadala Capitals, which is the alternative investment vehicle for Mubadala, private equity, public equity, and the latest addition is venture, our focus has been mainly in the US from an investment perspective. But recently, I would say over the past maybe 3 years, China has opened up significantly for the Middle East, right? Specifically for Mubadala. Part of that was capitalized by a joint fund that we had with the Chinese government to deploy $5 billion in China in private equity as well as in early stage investing. So that catalyzed a lot of sort of a partnership. And I think, you know, whether it's the US from an innovation perspective or even the Middle East, can't ignore kind of the up and coming sort of rise of China. So that's one. The second thing, specifically maybe as a foreign investor in the US, it's getting harder and harder actually for foreign investors to come into the US because of serious challenges. You know, so far we've invested in quantum computing, pharmaceuticals, AI, machine learning. We've been sort of like going through the process, which is not that clear. But that has presented its challenges. So there are two dynamics that potentially are making China, up until recently with all the coronavirus issues, but up until recently, sort of like really an attractive value proposition for Middle Eastern and non-US investors to go like and focus on that market. I'm not sure if you're seeing it differently or something.
Yeah, definitely. I think we heard about some of the challenges, but I think there's plenty of room for optimism. If you just look at last year, we were close to the all-time record of venture dollars invested globally. US has been #1, and we were close to the peak of 2018. Then if you look internationally, Europe had one of its biggest years ever. Middle East continues to grow. And I think the most important piece from the macro level is that we've had a lot of exits over the past year. So people talk about in headline news, IPO performance is down, you know, Casper is trading lower today. Like, it's easy to focus on this from a short-term perspective. But when you look at the returns for early stage investors, they're still massive. If you're an early stage investor in Uber or Lyft or any of these companies and they go public, whether the valuation's 14 or 20 or 50 or 70, you don't really care. Your fund is returned multiple times over. And what that means is you now have LPs getting liquidity, getting distributions, who can reinvest. So last year, we also saw a very large number of dollars going back into new funds, back into existing funds. And the exits from last year, I think, are a huge boom for the industry. And also, for a lot of the early stage entrepreneurs in the room, you can't always focus on what might be happening at the macro level. It's going to take you 5, 10 years to build your business. What you guys benefit from today is there's over 1,000 micro VCs. There are firms on Sand Hill Road and Mubadala and many others with 9- and 10-figure chests to go out and invest in entrepreneurs. I think now is one of the best times ever to be building a company, and you don't really have to focus too much on those headline news because yes, there might be some compression in terms of valuation multiples. Public markets have a different view of venture investors in terms of how companies are valued or what's a tech company and what's not. But for an early stage entrepreneur, there's more capital than there's ever been, there are more funds than there have ever been, and that's both in the US as well as in the Middle East. One specific anecdote on the Middle East is you're just seeing a significant increase in the number of investors there. And so before, if you look back 5, 10 years ago, there were 5 or 10 funds, and they were great funds, and they laid the groundwork. But now, for example, as one anecdote, there's an event on Sunday that my partner's at in Saudi Arabia. There are over 50 venture capital funds, and I hear there's over 120 in the region. And so think about that. Like just 5-10 years ago, there were 10 times less versus where we're at today. So whether you're a building company here or the Middle East or any other part of the world, I think from a funding perspective, you're covered.
And Sharif, just go back to I have a question for you. Specifically, you mentioned something that kind of I get from my investor friends a lot, IPOs, right? I mean, obviously I work with other emerging markets as well. Same, so you have like one IPO that has happened from that market. How do you address that concern of an investor as a founder is coming from there? I mean, it could be a top-notch founder. Obviously, from an investor hat on, you want exits. You want a good number of exits.
Yeah, I mean, we don't expect the majority of exits in the next 5 years to be IPOs, but there was a very successful IPO out of Egypt in the fintech space, and it's still performing really well post-IPO, which is better than here in the US. But it's just the public markets in the Middle East aren't that sophisticated anyway, so people would even double list or list outside. But we're not even looking at that. That's so far on the horizon for us. So we're just looking at building an early stage M&A framework or environment, which there's a very large startup doing very well now called Mubadala, largest Arabic site in the region. And they have the right mindset about this, and we've talked about it there. And some of the other VCs says, look, if you guys can start encouraging this framework for how we get to M&A, then we're game. We'll play too, because everyone knows we got to get to this liquidity. Alternative forms of liquidity are also sort of playing in conversations because secondary sales are getting more popular. It's a wild west from a business perspective because they're not so boxed into the best practice standard of VC that we're used to. We're like, no, that's not how it's done. They're like, yeah, well, it's business, so you can do it whatever way we want, right? So you see all kinds of alternative stuff happening in structures. It could end up being a silver lining in some way that they actually come up with a way for liquidity that wasn't there before, or revenue-based financing, or earn-outs in some way. But I think Maldua is the first sort of mid-stage company that we're seeing as a startup that has gone out and said we're about to go on a buying spree. And I've been trying to hint and encourage this because we have lots of little ants. Like the bedrock that we formed was, let's fund a lot of startups. So every country from Tunisia to Oman to Jordan has this company, that company, that company, beauty on demand. They have a online pharmacy. They have we have 10 in each country. So
the market is not big enough.
Little ants are not going to do anybody any good. But if we have one that's starting to show that they're the market leader, okay, it'd be great if they could start to get market share by buying up some of the small ones in those other countries and actually serve everybody's purpose if they did that. And we're having these conversations now. We have an annual retreat where we bring our portfolio and investors to it. And so far, several M&A conversations have been sparked from the retreats in previous years. And this coming year, we're having sessions just about that. So we're taking companies in the same sector and saying, okay, hey, you meet each other in health tech and fintech and so on. So we're trying to just foster that environment and let it happen. I think we're very happy with 5 to 20x exits for the founders, and we've already seen some where we invested at $1 million, the company exited for less than 10, and everybody's a millionaire, from that was involved in it. And for us, we get 7 times our investment in less than a year. That's not what Silicon Valley, you hear about the model and what it looks for, and let's get that unicorn, the outlier, and returns the whole fund. But also we're maybe unique, but our fund thesis isn't built on that premise in the first place. We invest in emerging markets, so we structure differently. But I think that'll serve even the other boutique funds in the region. It'll serve them well too if they get a 2 or 3x on every deal. And if we can do that, we'll just recycle the money and get liquidity, and then the encouragement will happen. Like with the Kareem exit, the 3-point-something billion exit to Uber, that all of a sudden people are knocking on our doors like, oh, you said VC. That's VC. Isn't that what did Kareem do VC? And so people are waking up. We have a huge momentum happening in 2019 to 20, which is lots of sovereign wealth funds and fund of funds are starting to come in. The whole 300-person pipeline that we were raising for our first fund, who were all naysayers about the business model and the asset class, are now like, oh yeah, we want to do this. So how can we do this? And so it's changing a lot, and there's a lot of top-down incentives from governments, matching programs, and a lot more training coming from the bottoms up. I think it's really encouraging.
Yeah.
And I want to ask a question to Anastasia. Like, I think this is great from an investor angle. I want to talk from a founder angle. Early stage is one of the hardest thing to start with, 90%, 95.
For us, so they already have traction, they already have market from funding from their home markets, but they need to go to that extra step to take their company to the next stage, and that's where we come in. The biggest challenge that we are seeing outside of all the obvious, which is a very high operational cost here, super expensive talent, you know, the product market fit that they need to approach from almost ground up when going to a new country, not necessarily the US, because when they come here, the investors want to make sure that you already achieved that in your home market and then you're coming to a new region. But taking a step back and thinking of the founder more of a personal journey because they are the leader of their companies, the biggest mistake that we see, and it's not very easy to change, unfortunately, very fast, is the mindset of the founders. The idea of thinking big is sometimes very foreign to the founders that are coming from different markets, and a lot of comes culturally, right? There's a lot of cultural differences. We work with founders from many different cultures and the regions and countries, so it doesn't come easy. But when you come to Silicon Valley as a founder from abroad, and it's very, I'm speaking from experience, I'm an immigrant myself, I'm originally from Russia and been living here for 10 years now, you have to start from ground zero, building your network, finding the resources, finding the right people, and it's very hard because Silicon Valley in particular is very protective of its network, for better or worse, right? There's good things about it and there's bad things about it. But if you're a founder that we believe that you're building something amazing, you deserve access to the same resources that people are here. The people who were born here, the people who were raised here, the people who went to schools here, because they have kind of that first mover, if you will, advantage. And the idea of thinking big, like when you come into Silicon Valley, you really need to think that you're competing not just with the startups in your country, in your local ecosystem, where you're competing with the rest of the world for exactly the same money from investors, exactly the same talent, same resources. So shifting that mindset, and we always tell our founders, think of Silicon Valley as Olympics, right? So you have to come here and really, really compete and prepare yourself and prepare your team that you have to show that vision to the investors, that you're going to be so big. You should be confident, but you still can't be humble, right? Like, you have to lose your ego at the doorstep when you come here. But it's possible, it's just very, very hard to manage when you shift and come here as a newcomer. So, and where we come in is we build a program from scratch for every class when they come and join us. So we work a little bit backwards. We select founders first, and then we work with each founder individually. So we create a customized curriculum that has a very bespoke agenda for the 2 weeks, and we bring amazing thought leaders, some of which there are a lot in this room and sharing the stage with, but at the same time on the agenda today, those are the people that really volunteer their time and give back and pay forward. That's all Silicon Valley is about, and mentor our founders, lead workshops. And we don't require for our founders to relocate here, right, before or after the program. It's completely up to them. But if they are thinking serious about it and they need to fundraise from the local investor ecosystem, there are a lot of things that they don't know. And we want to make sure that we're prepared for it.
And just quickly, how long has the program run and how many founders have gone through that program?
Yeah, so we officially were about 3 years in the market. We've done, over the last 2 that we've been publicly announced, so I should say, we've done 5 classes. So over 5 classes, we had 45 founders. So we keep our classes intentionally small. That allows us to build a customized experience for all the founders. So, and this year we're doing 2 more, which was the next one coming in the end of March.
That's great. That's great. One thing is we're talking about capital and access to capital for founders. What we are seeing is obviously with the data tracking, the trends from venture landscape has changed over the last few years, and capital is no longer remote, right? So and we've talked a little bit about kind of how you did your introductions and how you help founders, but specifically if you have to point to each one of you, and Anastasia, yours is a little different, but for the other 3, for the companies you invest in, what is one thing that you provide that is extremely differentiated to what other folks do? You know, I know there could not be one, but probably more. Feel free to add on. What are the things that you think that you guys differentiate, and you feel that is important to increase our probability of success? Maybe.
Go ahead. Go ahead. It makes me laugh because I think like the headline, every VC sounds like the same. Like we're value add, we're different with this and that. Like underneath the surface, it's all the same like thing. But
yes, I want to see that's a good point because I want to peel the onion there, right? What does the value mean to you? So that's exactly. I actually add value at a service. I scratch it off. I don't want to call it because I want to know what your value is to the founder because I put both hats on as an investor and a founder, and I get to see the pain on both sides. And I want to hear from you all because I know personally all of you. Sure. There's so much more that you all provide. So I want to hear. So remember, Alaa, start off.
Yeah, sure. I mean, if you come and think about Mubadala, and you said something sort of triggered me, so I wanted to answer it, but then Priya cut me off. But what you said is like Mubadala has like 9-figure checks, which is true. You're right. But the problem is those 9-figure checks that we were asked to write comes from an investment banker that went through Europe, landed in the middle of the desert, asks you to write a check without diligence and without meeting the founder, and you have like 1 week to decide on a $50 million check, right? Which, Mubadala did before some of these checks, right? Some of them turned out to be good, some of them, actually most of them turned out to be bad. And we're trying to change the model. We're trying to partner with these founders as early as possible. At Mubadala, kind of the ventures business, we write actually seed checks. Like, so we write $1 million check, $2 million checks sometimes, and we can go up to like $40, $50 million, right? So we're trying to find those early companies ahead of basically the time where they will come to Mubadala and ask for the money. So capital, I mean, let's be real. I mean, capital is a commodity to a certain degree here. But the access to capital that Mubadala has through its various pools, right, is sort of like infinite, right? Like Mubadala, in one business, we put $23 billion just to launch one business, right? Which is right now the largest employer in upstate New York, which is in the semiconductor business, right? So there's sort of like endless pockets, even though I don't really like that term. But that's, again, it's a commodity to a certain degree. What we're trying to do is to really be active business developers for our portfolio companies, right? So I'll give you a couple of examples. We're investing in a company called Color Genomics. I'm not sure if anybody knows it here, which you basically provide sort of like a sample, biological sample, and they can tell you what is the risk of developing cancer. When we invested in Color, it was a local company, very limited sort of like global exposure. Today, anybody under the umbrella of Mubadala has access to the Color test, right? We're working with them to kind of expand it in the oil kind of companies of Mubadala, thousands and thousands of employees, right? It's easier said than done, and there are a lot of kind of strings that you need to pull and active business development, but that is sort of like the differentiation that we're trying to build. We have ultimate respect to Sequoia and Dreesen and others, but they really cannot do what we do, which from a global perspective, right? That's one sort of like key differentiation that we're trying to deliver on. And again, I mean, it's case by case. Facebook is going to always be Facebook, whether Mubadala lives or not. But like those kind of special entrepreneurs in which we can add the value to them, I think, will differentiate it.
Yeah, for us, I think founder training and education is a big thing for us. So we spend a lot of resources and time that most of the other VCs around us are doing, that to give resources to the founders and actually go through training programs with them. So they can be called accelerators, but we have other kinds as well. And what in those we provide like a very structured. We focus a lot on growth. So we do a lot of growth framework training. So you hear about growth hacking and digital marketing, but like you might do it willy-nilly, But if you go through this program, you have a very structured weekly process to be data-driven. It reduces arguments, hopefully, between founders about decisions. It really shows you what numbers you should be watching in your company, and gives you the tools and teaches you actually how to use the tools in the right way. So that's one thing that we do through our programs. But in addition to that, I think we try to, even if it might hurt us sometimes in the short term, try to lay a very solid framework of best practice in the way we deal with the market. And we've been told by other VCs like, hey guys, why are you doing this for them? Because that's more fair for them. Even if it means raising the valuation slightly to make it less diluted for the company in the round. And we do that with our docs by having global standard docs that we use, same as YC. And that's, I think, at least in the MENA region, it's having a real effect on the market. We still have headwinds from all directions coming at us. Anybody who's done investments in the region will see it, but we're in at least 35% of funded seed deals. So we're having an effect on the market. And then when we do something like our portfolio retreat, we invite all the same or later stage investors that are working in the region. And we're teaching workshops to our founders, and the investors are sitting listening to them as well. So they're getting, by default, training on best practices as well. We do legal workshops. And then we've run already investor training in Saudi because a whole plethora of new funds have been launched in Saudi and fund of funds. And so there's a bunch of new fund managers and VCs who just didn't have the background. So running investor training, running training even, we did another one in Riyadh where we ran training for those managers who are going to run accelerators and incubators and co-working spaces because they're the first touch point for founders and typically where most of the miseducation is happening. So we're trying to train them. So like, we look at the whole components of the cycle, who's touching these founders and can we make sure that everyone has at least a base knowledge? So that's one thing that we try to do to sort of set ground rules.
Yeah, for sure. I think there's a couple ways any fund can try to differentiate themselves or add value, which we'll skip using that word. One is specialization. So you might meet a fund that is the best cybersecurity fund or the best fintech fund. That's all they do. That's their whole network. It could be a strategic set of LPs. Next way is through scale. So Andreessen, Sequoia, these firms that have been around, they've had a head start, they have multi-billion-dollar funds. They'll always get the opportunity to invest in a lot of companies because of the size and scale of this organization. Another one is just has to do with platform. And so on the platform side, you're hearing a couple of these different pieces. For us, we were really thoughtful about this one angle because we recognize, to your point and what most people recognize, there's a lot of funds, there's a lot of capital out there. So for us, it was part of our DNA, it was part of the origin of the story. And so our firm grew out of a multifamily office. We work with some of the largest family offices in the MENA region. And so what it allowed us to do in terms of portfolio support was take companies from here or from Europe or any other part of the world and help them expand specifically into that region. And so we have a couple examples of this. It's a young firm, but one of our examples is a company that's based in Boston. It's called Area 9. It's an adaptive learning software company. The founders sold their company to McGraw-Hill for $400 million. Non-compete ended. They left to start version 2.0. For them, they knew they wanted to expand this business globally from day one, and they wanted to find investors that could help them do that. We met the company very early on, right after they were leaving McGraw-Hill, invested in the company, signed a joint venture across the MENA region, ended up raising a $30 million Series A. We've brought them several $1 million worth of business in this part of the world. It's not just the network, it's the go-to-market, it's the hiring, it's the strategy, it's all of the pieces of understanding that we have and a lot of our network have from doing this over decades. And that's something that we felt which was very unique. It was also very specific. And it's something that won't resonate with every company, which is completely fine. I think you'll hear from any set of investors that there are pieces which are something that's a perfect fit for some founders and something that will mean nothing to other founders. And we're okay with that. We're not going to be the next $10 billion fund. We're not trying to raise a $100 billion fund. We recognize there's an opportunity in the market for what we're doing, and we're seeing success with that. We're seeing founders who really understand the value and it resonates with them. And so that's been our differentiator. That's something that we lean into, and that's something that's been working.
Awesome. I know we have like 3 minutes. I still have so many questions, and I'm sure you guys do too. Any questions? I want to make sure I take one or two.
I was hoping that maybe you could enlighten us. Stacey talked about her effort with the founder fit, but maybe the other gentleman can tell us what their investment for theses for founder fit or a sector fit, which was not big.
So the bar is different there, and I can't really comment because it's not homogeneous either. It's just all over the place. So we get very savvy-ish kind of founders who, that just means they actually worked at real companies before for 5 years or more. Maybe they're mostly in Dubai because they're expats, and so they speak well and they're presentable, so you could be tricked by that and be like, oh, these guys sound really good. But there's the ones who don't even speak English and their engineering team and this, well, that sounds like Silicon Valley, like they should be engineers, right? So which one do you take? Do you take the super savvy, polished guys? Well, they can spin you for a ride and actually not know anything about building products and startups. The other ones are all engineers. They can build probably products, but they just don't know how to pitch for investors. They don't know how to sell. So pick your lot. So sorry, but that's the answer for me.
Maybe Alaa,
Totally
just
sorry.
you right at time, maybe that's.
Sure, yeah. I mean, we're sector focused. We're typically thesis-driven investors, and we focus on 4 sectors. Fintech is an area that we're focused on. Logistics and transportation is an area that we're focused on. Life sciences is another area, and broad healthcare. So anything in that realm sort of like inside us.
Was that the question? Because I didn't answer that question.
Yeah, that's the wrong
I
question.
think it's going to be offline. Just a closing comment. Oh, I was going to say, just a closing thought. If you have to say one word as an advice to a founder coming from global into the US market, what would be one word? As advice.
Prepare. Like read and prepare. Like
Alaa.
Come to Silicon Valley.
Do your research. I mean, it's not one word, but it's important.
2 words, learn storytelling.
Yes.
That's the best word.
Very important. Davey, we're going to say something.
I guess maybe any thoughts about what type of other infrastructure services and resources are needed in emerging markets? Off the top of my head, venture debt,
Yes.
is that available in certain regions, fund of fund in secondary markets? Any thoughts about what's needed and or I guess more likely because some of them maybe aren't super liquid?
So Mubadala, we've launched a big fund-of-fund effort in the MENA region, so we invest in other funds. And we are working on venture debt vehicle, so I agree with you on these 2 for sure.
Awesome. Let's give a round of applause for the